Okay, my beautiful friends, here we are, you and me, you and me. Together again at last. It is still Thursday. This is my post-market wrap-up on this July 1st, 2021. First of all, I want to give a big shout-out to those of you who have chosen to support my work. I really appreciate you, like, more than you know. And I just wanted to get that out of the way. All right, people. So let's talk, you and me. So I hate, or yeah, maybe I do hate to sit here and tell you every day that we hit another record high in the stock market, despite the fact that we continue to get abysmal economic news over and over again, and we have a lot more to talk about. So yes, a new record high for the S&P 500. The Dow Jones Industrial Average put on a nice gain. The Nasdaq put on a gain today. It's easy money. There's no other reason for it. And this easy money, like I've explained to you, Wall Street is starting to realize that the Federal Reserve is in fact going to be buying more debt, not tapering, not cutting back on purchases. The Fed will be buying more, and I'm going to talk about that too. Let's go back to the market. Okay, so like I said, a new record high for the S&P 500. No surprise to you. 10-year yield stable. The dollar put on a slight gain today, which did keep stock market gains muted, believe it or not. Had the dollar gotten weaker, well, the stocks would have went higher. Crude oil, people. Crude oil hit $76 a barrel earlier today. We did close with regard to WTI crude over 75. And I'm going to give you one guess, just one, as to what was the best performing sector of the market. Right. Energy, of course. This is a mechanism, people, all of it. Prop up crude oil. You got banks that are going to do well, the financial sector, because they're invested beyond their eyeballs in crude oil. And then you got, of course, all big energy corporations here. They're all going to do fantastic in this environment. It's unbelievable. Gold put on a gain today. Silver suffered a slight loss. Cryptos remain under pressure. And pretty much that's where we stand with the market here. Now, I want to cover a bunch of stuff with you. I don't even know where to start. All right, let's start with the, I guess, more bad economic news that we got today. Of course, you remember how it works. More bad economic news, the worse it is, the higher the stock market's going to go. So we found out today that construction spending, economists, those rocket scientists out here, the economists polled, we're expecting a gain, a substantial gain, as a matter of fact, with regard to construction spending. Well, that didn't happen. They were wrong again. As a matter of fact, it reversed lower, a huge miss with regard to construction spending. These economists, honestly, that they poll must be the most brain-dead individuals to ever live on the planet Earth. If they would have asked me, I'm not an economist, I would have told them it's going to get worse. And I obviously would have been correct. So would you. This whole thing is absolutely insane. Now, how about this one? That's one round of bad economic news with regard to construction spending. Cratering, reversing lower. Manufacturing also missed the mark. We now are showing a slowdown. So manufacturing disappoints. Great, let's push that stock market higher. And that's exactly what they did. Now, we also found out that food producers are now saying that the drought is going to be affecting the price of their product, food. And you're going to start paying even more because it's the drought's fault. It's the drought. It's not, the Federal Reserve that's printing cash out of thin air like there's no tomorrow. Well, there's a tomorrow for them as they continue to issue in their final plan here. And we got another piece of bad economic news I want to talk about, but this is, again, no surprise to you. I've explained to all of you, yeah, you too, that we were going to see debts and deficits hyper explode. Well, last year we had a budget deficit of around $3 trillion. Today, it looks like we're going to hit that mark yet again for 2021. And it gets better than that. Excuse me. This number is expected to increase $1.3 trillion every single year until, this is what they're projecting, 2031. So let me ask you, excuse me, let me ask you, where does the cash come from to make up the deficit? Any guesses? Oh yeah, exactly. It comes from the Federal Reserve, who's hyperinflating their balance sheet by design. All this is by design. So we're running multi-trillion-dollar deficits every single year, and they're expected to balloon. Over the next 10 years, they're saying at least $1.3 trillion higher every year through, and that's a lowball number. That 1.3, it can't stay at 1.3 trillion. It must go 1.3, 1.6. It has to continually rise exponentially. So you can only imagine what the U.S. budget deficits in aggregate are going to be in just a few years. Again, this is a phenomenon that is bringing not just the United States, but the world to its knees before the central banks. And we have our inept representatives. Oh yeah, they're really helping us out here because they're going to borrow trillions of dollars more that we don't have. And where do they get it from? The Federal Reserve. Do you see how this works? It's all the Fed. When I have explained to you since time immemorial that the Federal Reserve is the government and our representatives work for them, I think you really do understand that what I'm saying is true here. It absolutely is true. Now, I want to talk about this. If you recall, you have heard this guy explain to you that the Federal Reserve will be increasing asset purchases moving forward. Not tapering, not cutting back, increasing. Well, Wall Street right now is betting on rates dropping through the end of the year. Now let me ask you, since you all know this and it's true, how does that mechanism work? The Federal Reserve cannot just magically say they're going to keep rates low or keep them lower. The Fed has to get in here and buy the debt. So if Wall Street right now is betting that through the second half of 21, they're expecting rates to fall, what does that mean? It means the Fed will be increasing asset purchases, not tapering, not cutting back. Again, when you hear talk like that out of the mouth of a Federal Reserve chairperson or a president that we should be tapering, realize that the polar opposite is absolutely true. What they're trying to tell you is they will be increasing asset purchases. The Fed has to do that. Again, as part of its final solution to own it all, the Fed will increase asset purchases. And the market knows that. So henceforth why Wall Street is betting on rates dropping. So understanding that the mechanism here in place is to keep rates suppressed and suppressed further. Where do you think cash is going to go in this environment? Exactly. You guys and girls are so smart. It's going right into the stock market. So you can expect this record run, record high, record high, record high to continue. Will we get a pullback? I don't know. We don't get pullbacks anymore. Will we get a correction? I don't know. We don't seem to get those either anymore. It's all about easy money, and the Fed is about to unleash a lot more. There's just no doubt about it, people. I want you to understand that. So again, let's just summarize real quick. A new record high for the S&P 500 today. It's not going to stop, just like I've been telling you. Today, crude oil surging. We hit $76 a barrel. The energy sector taking off. Imagine my shock. No, I'm not shocked. Manufacturing. Missing the mark. Imagine my shock there. No. Drought to push the price of food higher. Lovely. Oh yeah. And debts and deficits, people, they are going to balloon like very few of you really understand. I think maybe those of you that follow this blog understand, but most people have no idea at all of what's really going on here. This grand takeover, it's grand theft of the world. The world is being bought right now by central banks, and it's being fostered and allowed to happen via our representatives who work for the Federal Reserve. We have no representation anymore, people. It's time that we start understanding that and maybe, I don't know, take action. All right, people, with that said, very important video. I covered a lot of things here with you. And just one more time, a big, huge shout out to those of you who chose to support my work. As you all know, on the first of every month, this guy asks for your support. If you think I'm doing a good job, Greg's an okay guy, I want to support his work, please do that. In the description of this video is a link. And you could choose to support my work. And I always say, how about just $5? All right, people, with that said, I will see all of you in the morning. Just raise your awareness, people, as to what is going on around you. Because what you're seeing right now, again, none of this is by accident. And it's about to get monumentally more extreme. I can promise you that. I'm out here.